Good morning, everybody. Welcome to Merkle Meets. This is going to be a great episode. Today we have three of the probably best compliance officers in the crypto space. We have Steve Aquino, head of legal at Mesh, Lauren Benjamin, chief compliance officer at Kraken, and we have Peter Singer. He's the chief compliance officer of Alpaca Crypto. Full disclosure, I've known Peter a long time. Excuse me, right? It's early here. And yeah, we've known each other for a while now. One of the first people I actually talked to, I guess way back in like 17 or 18 about crypto. So a long time ago. But anyway, three of the best out there. This is going to be great. We're going to talk about policy clarity and practice and what U.S. regulation means for protocol design, risk, and compliance. I think we'll probably be mostly in the risk and compliance area, but this is going to be good. So I'll tell you what we'll do. Why don't we start with Steve, and then we'll go Lauren and Peter, and you guys, everyone can introduce themselves and make yourselves known. So go ahead, Steve, introduce yourself, sir.
Wonderful. Thanks, Robert. And so thank you and to Merkle for inviting me to this great conversation. As Robert said, I'm Steve. I'm the head of legal at Mesh, and Mesh is creating a global crypto payments network. So compliance, obviously, security, and regulatory compliance is very important to everything that we do. I run our global legal and compliance function along with our chief compliance officer. And that usually means that we're thinking about compliance because a global crypto payments network is global here in the US, in the EU, and in basically every other regime that either does or does not even have crypto focused regulations. So certainly something that's always top of mind for me.
Hi,
thank you, sir.
Hi, I'm Lauren Benjamin. Sorry, I didn't mean to jump your gun on Robert. I am the U.S. Chief Compliance Officer for Kraken. We are a digital asset exchange. We've been around since 2011. We have a fairly wide global footprint. We're one of the larger exchanges in the U.S. as well as in the world. I've been in compliance for a little over 12 to 13 years. I started in the formal financial institution world, and prior to that was sort of like in academia. So I do pride myself in being one of those compliance geeks. I've loved it for years. I find it totally fascinating and but I also really enjoy the industry aspect. It's really fascinating and dynamic and exciting, and especially with what's going on right now and in both the U.S. regulatory environment, but just sort of globally growth of the industry. So excited to be here. Thank you for having me.
Well, thank you, Lauren. Appreciate it. All right, Mr. Singer, your turn, sir.
Hey, thanks for having me. I appreciate the warm intro. Yes, we've known each other for a long time. I'm Chief Compliance Officer for Alpaca Crypto. It is a subsidiary of Alpaca Markets. And Alpaca Markets has two sides of the house. They have a broker-dealer side, which is what a lot of people are familiar with. And I run the crypto side of the house because they don't have any securities licenses. We have a lot of exciting things coming up. We're a spot exchange. We have money transmission licenses in about half the states and working on the other half. And my background is that I've been doing crypto compliance, fintech compliance for at least since 2018 for the crypto focus. But prior to that, I've been in this space since 2011 or so with fintechs. Now it's been a while. I don't like to do the math, but obviously, you can tell.
Yeah.
Yeah, I love this space because it's always changing and it's so dynamic, and so excited to have this conversation with everyone.
Yeah, that makes Peter one of the OGs in the space there. Yeah, so been around a while since it was just Bitcoin, right?
Since he didn't have a beard.
Yeah, since he didn't have a beard. He started growing it when he started.
Exactly.
Excellent. Well, today we're going to cover some points of the Genius Act. It's signed into law now, and it mostly deals with stablecoins, but there's certainly some compliance and regulatory issues in there that we all have to think about. So we're going to kick off with you first, Steve, and let's talk about what you. Oh well, I just introduced it. Recent U.S. regulatory changes and how they are important in shaping the future of the crypto market. So, how do you see this all playing out?
Yeah, so I answer this from the perspective of somebody who is at a payment focused company and who thinks about that sort of side of the industry. And I thought a lot about this. Can I pick one change? I think it's really hard. And I don't mean to squirrel away from the question, but if you think about regulatory change as the regulators' overall view towards an industry, towards their remit, I think you have to look at it that way. We've seen a complete paradigm shift in the U.S., like an acceptance of the technology, its potential. 2 years ago, I couldn't get a bank account. If you said you touched crypto, immediately my insurance premiums doubled. And so if you just think of that change as, or I'm sorry, that shift as the change, that's really what it is. And then what's flowed from it, right? The SAB being rescinded, the Genius Act, the Clarity Act is coming, all of that couldn't have flowed without that change. So, but if you pin me down, right, the one change to me is the Genius Act getting passed, because we have a market of hundreds of millions of participants, the largest financial institutions in the world, now with the ability to be stablecoin issuers, and if not issuers, to jump in, and for company like Mesh, where we're building the infrastructure behind all that. That is just a massively a massive market potential for us. We've removed all these barriers to entry in the global economy, so that anybody in any country around the world who wants to access the US dollar can do so very easily. So I think of it from a very high level kind of business perspective. And I think that's really the Genius Act is going to be crucial.
So real quick follow-up, 30 seconds. Do you think that opened the doors for Mesh a little wider, or do you feel like there's some new sunshine coming in?
So I think what it does is, since we're an infrastructure provider, we're the connection layer, we say, or an orchestration layer. We can allow these payments to happen. As we see, let's see, Tether's coming to the US, and we're seeing all these new change popping up, these new coins popping up. I think of it as cities, and we're building the roads or the communications between all of them. So yes, it's a massive market opportunity for us, and beneficial for us as well.
Excellent. I never thought of it as a road, but that makes sense to me. Yes. Yeah. Yes. Lauren, you want to take a shot at that?
Sure.
U.S. regulatory changes?
Yeah, I kind of thought of this more from an operational and compliance risk development standpoint. So I think there are sort of like three components to the changes. I think Steve is spot on. Like the environmental change in the US, that shift from it being seen as associated to illicit activity solely, and that the fight against the industry itself has definitely shifted. We couldn't get bank accounts, or we had bank accounts shut down. So I think that shift is huge. But from just looking at the Genius and the Clarity Act and what it does for us, is I think there's sort of three different components that are solid changes. The first is this sort of shift from this patchwork of laws across 50 different states. I mean, many of the states have now adopted the MPA, but they've only adopted portions of it. You have to have licensure in all of the applicable states. This gives us an umbrella on the crypto asset side. I think there's a caveat that we can get to, I think, probably later, but that for certain transactional activities that exchanges and companies like Alpaca or myself do conduct, there still will be a requirement for the MTL. So it doesn't necessarily eliminate all of that patchwork requirement for licensing, but it does give you an umbrella on a federal level for a framework that is symbiotic or more similar to what you find in the global regulatory regime in like the UK or the EU. We have a framework that's much more consistent. And I think along with those frameworks are two really important components that are different for the industry that we're not used to. It raises up digital asset service providers from being an MSB to being a formal financial institution. So it does require a higher standard of compliance alignment. We're now going to be required to be, aligned with CFR 1020 or, all of that specific code, rather than the subsections that are assigned for the MSBs that are slightly less prescriptive. And then it does sort of also simplify, or not simplify, but like make consistent the approach to consumer compliance across the board for the industry. So we will all have to align to the segregation of custodial assets for both commingling with operational entities, commingling of operational funds and client funds. There's a lot more stricter standards that will have to be implemented. And I think that's a really good thing when you look at stuff like FTX and other industry actors that have had a lot of problems when it comes to the securing of your customer funds. And then the consistency across the board with regards to marketing materials, error resolution, all of those sort of fall into play with the consumer compliance. So I think that it's going to raise the bar, but in a way that both stimulates business, helps innovation, and then also protects the consumer at a larger scale.
Wow, Lauren, you talk about unpacking the luggage. You just unpacked so many topics.
Yeah.
But I do have a follow-up that I think a lot of people lose perspective on what it means to be an MSB and then have to get an MTL in every state. Do you think anywhere along the line we see something like the Genius Act that does away with the MTL from every state and just gives you a federal charter around?
I think so, yes. But I think the underlying question is, will states, the Clarity Act and the Genius Act touch on digital assets. They don't touch on fiat peer-to-peer. They don't specifically detail whether or not the onboarding and offboarding of fiat rails is going to be considered as part and parcel to the transactional. In some states, they say, okay, if you're touching crypto at any point in time in the leg of the transaction, meaning you're depositing fiat for the exchange of crypto, that's considered a crypto transaction. California's taken this approach. We're not going to license you because that pair is there. But other states say, no, you're onboarding fiat. Therefore, and I heard Colorado say this at a conference last week. They're like, no, you're onboarding fiat. Therefore, you need an MTL. So I think there's a little bit of nuance there that's not yet clear. And the Clarity Act in its current form hasn't really defined that. So I think there's going to be some question as to that. And then I think from looking at like the New York standpoint, is New York going to want to go, okay, no, I put all of this money and time into creating the bit license. I'm not going to fight the federal government in terms of preemption and letting it just go run and take away what they consider themselves to be as sort of like the gold standard of the benchmark for digital asset licensing. So like, Peter said, we have to be licensed in every state in order to transact in both fiat and crypto. Some states include crypto, some states don't. But more and more it is being incorporated both in the actual reg and the rule of law. So I think there's still a question as to whether or not we have to maintain both registration and licensing, especially if you're offering a fiat peer-to-peer transactional activity. Like that's just straight, or a payments, offering where you can pay somebody in fiat. That's a traditional money transmission activity. So therefore, it's usually covered under an MTL license, and I don't know that that's changing.
Yeah, excellent analysis. So, thank you, Lauren. You're a wealth of knowledge. I think I'll just start calling you if I have a question. Peter, you want to take a shot at that? Regulatory changes and what's most important about how they're shaping the future of crypto markets.
I will do my best. That's why this panel is so great that, Steve and Lauren just unpacked everything. I was like, okay, well, what else can I add to this conversation? Like, nope, she's got it. Nope, framework. Nope, states are going to fight. And like, we're going to see how that all plays out because, honestly, at the end, like Lauren said, it is a big thing for the states. It's a moneymaker also for the states with the exams and the registrations and, licensing and those sorts of things. States, I do remember reading in the Clarity Act that there's the consumer protection may still require some sort of licenses or some sort of well, the state, you might have to get a license from the state. I think they'll take a slightly different angle and be more like along the lines of, we have to inspect you. You have to have been inspected and have this new license, in order to do it, even though you have. So it's not an MTL. So like, okay, the feds can have that, but you have to get this, you have to pass our smell test to make sure that you're a legit company. And I think that's might be one way that they would pivot to take that. But to your question, some of the most important things to happen from a regulatory standpoint in this industry, I believe, have yet to happen. So I think the Genius Act gave federal legitimacy to crypto. Now, FinCEN, put out their initial guidance on cryptocurrency in 2013. They're going like, okay, so they're like, all right, FinCEN, thanks. And everybody in the rest of the industry has just sort of with banks and stuff. They're like, no, this isn't going to take off, or well, we'll see what happens. And then because I've been through choke point 1.0 and 2.0, like you couldn't get a bank account. And now with the Genius Act saying like, no, crypto's legit, it's here to stay. And now everybody's like, oh, all right, well, there's a big law for it now. So now we have to start thinking about this. It's not going away. And you're seeing that shift with the OCC and the NCUA, and how the Clarity Act and the Responsible Financial Innovation Act, which is the Senate version of the Clarity Act, and how those two come together. And what that turns out, that will be a true watershed moment of like, all right, this is the standard going forward. So I think the biggest impacts have yet to come, and especially with the SEC chair Atkins saying that they're working toward a new innovation exemption for crypto activity, and he hopes to release that by the end of the year. So what is that going to be? So I think we'll finally see who's going to win, the CFTC or the SEC, and who gets to regulate crypto.
An Innovation Act, that sounds like ICO launching days 2.0 coming up, right? So definitely interesting.
Exactly.
Yeah. I'm going to throw this next question out there, and anyone who wants to take it can take it. So, and Peter, you've kind of opened the door to this a little bit on the future proofing. So going down the line, we see some regulation coming in. We see a whole different environment in the United States from what it was just a year ago. So, changes are coming, and not only in regulatory sides, but also in technology. I mean, every day we see a new token or coin or something launched, and it has a different purpose. Some are just, as always have been, not worth the time it took to make them, and others promise to be, huge. So how can firms, like we're talking to here, crypto firms in general and Mesh, future-proof their tools, build processes, and govern, in a way that adapts to regulatory and technology coming up?
I'm happy to jump in. But sorry, right. Peter, I didn't mean to step in, but I'm happy to jump in because, again, I think of it when you say tools and when you say processes. Again, we're a payments focused company, so I think of the fact that regulations typically boil down to consumer protection and prevention of illicit flows, at least as they apply to sort of the payments industry. So for me, and this is a simple answer, we have to rely on transaction monitoring that leverages AI. So I always know where the source of funds is, and not just know where the source of funds is. If I'm thinking about how to design a program that will properly designate a transaction as red, yellow, green, or somewhere in between in terms of flagging, blocking, reporting it back to our customers. And I think that means, I need to be able to see not just does this transaction, is it related to the Bybit hack, but is it 0.5% of the funds? Is it 25%? How much went through a mixer? That really that granularity. Because again, if you start from the viewpoint that the regulations typically are going to look to protect the consumer and to prevent money laundering, terrorist financing, that really has to be a baseline again. And I think of it from that point of view, but really happy to hear or looking forward to hear what Lauren and Peter have to say.
Yeah, I think when you start talking about tainting transactions in different levels, I think that presents a huge problem. In fiat currency, we don't have that. If you were involved in an illicit incident, but then you walked into 7-Eleven and gave me that $5 bill that you earned from that, then that bill is essentially clean now because it went through a transaction and it was a lawful transaction. But in crypto, it's different. We can see the whole provenance of the transaction well before it actually occurred, and it creates a whole issue around what is the correct tainting of transactions and the funds that come from. So very interesting concept that one is if you're not familiar with crypto. But Lauren, Peter, you want to take a stab at that initial question?
I can, but let Peter go first because I don't.
Okay.
Go ahead, Peter.
All right. I'll say that one thing that I look for, because it is hard to know what vendors you have out there. Like there are a lot of great vendors out there, and there's more coming on the scene all the time. And which ones can you choose? Which ones can you trust? The ones that I look to are the ones that tend to be the most active by providing updates and newsletters, or they're active in lobbying groups, or they're really on top of the changes of saying like, hey, here's a new fraud that's being detected. And, it's like say but they're not just saying, oh, well, here's pig butchering, and pig butchering is a problem. It's a romance scam for crypto, for those not familiar with the term. And but like, yes, we all know about that, but the one they're saying, oh, well, here's a new twist on it, or you have to watch out for this type of exploit, or here's this new pattern that they're doing. So ones that have a lot of information that put it out there a lot, and trying to future-proof your process. The best advice I can just give is that you must build it to scale, because I always say there's nothing as permanent as a temporary solution. So if you have to use a temporary solution, then make sure you've got an end date for it. But otherwise, it's around forever. Just like, that pile of laundry you put on the chair or the treadmill, and you say, I'm going to get to that tomorrow, and then next week, and it's still there. The other thing I would say is that reg tech is becoming increasingly valuable. And there's a lot of firms now starting to come out that, especially with AI component, like Steve mentioned, that it's a huge game changer as far as being able to get all of the regulations, do the deep searches, and then consolidate it into one space for you to read and review, and then go back and to really understand the material. So AI is an assist. It's not, it doesn't do your job for you. So I think that's how you can do it for future proofing.
Interesting. Yeah, nothing's more permanent than a temporary solution. That is so true. Wow, that hits a nail on the head there. Lauren, you want to take a shot at this?
Sure. I kind of thought of it from a sort of a macro and a micro sort of approach. So on the macro side, I think Peter is spot on that, when you're thinking of future proofing, you have to think, where are you going to be in 5 or 10 years? And I think because of us in the industry, a lot of us came out as the startup and the fintech sort of feel of things, where like, you build quick, you build fast, you build easy and cheap, and you get it going so that you can meet your requirements and just keep moving. And what that does is it forces you to fix things continuously as you move forward. So what I'm going to recommend is not necessarily great advice for the sort of like new company in the startup. It's sort of unfair, but I think you have to think forward. You have to be forward thinking in how you're going to approach building and developing your framework and your compliance program, what vendors and tools you're going to integrate with, how you're going to integrate them. Because later on, it will be cost beneficial for you in the future, because it'll save you from all that remediations, from the fines, from the issues that you may find that you have to adjust and rebuild. So I think forward thinking is really key in building, in future proofing your system. And then second, on the, more of the micro level, to what Steve was talking about, when you're looking at systems, and I kind of actually disagree slightly with you, Robert. I don't think that the ability that blockchain analytics provides with regards to identifying the taint and being able to see where a coin has come from and where it's going to, you have delayed attribution. You can look future where that coin goes to in terms of the hops, where it came from, how much of the taint is associated to a sanctioned party or an illicit activity. I think actually gives us the heads up than the financial institution world does, because we can say, look, we can tell that dollar that you just deposited is associated not only to illicit activity, but we can tell you it's associated to CSAM activity, or we can tell you it's associated to terrorism financing. Now, I think the point about the issue with regards to how you identify the level of taint that you should be reporting on or acting on, that's a different story and a different question. And that takes the tuning, the testing, the model validation, the repeat of that process, and really sort of figuring out not just where your risk appetite lies, but where the effectiveness of the tools that you're using lie. So, do you get really good usage of the alerts that are arising when you put the taint level at X? Is it better? Do you get better alerts and more quality reports that you end up producing if you raise it or lower it? So I think the fine tuning of that makes a huge difference. But in terms of future proofing, buy once, cry once, spend the money on the decent. It's not going to be cheap, but once you get that system in place, to Peter's point, it's in place. You don't have to replace it. You don't have to go and I have that whole pile of laundry I have to fix. Pile of laundry doesn't exist. It releases a much smaller pile of laundry.
I actually, sorry, I didn't mean to cut you off, Lauren, but I wanted to build off that, because I'm coming from the Series B startup perspective, where we're actually we are taking that approach, where yes, we're trying to build fast and ship product, and we think of compliance as an investment rather than a cost, because we're doing it while we're still small. We have a very small and mighty compliance team. It's so much easier to do a business impact assessment, to adopt transaction monitoring, to scale, to adopt your policies and procedures when the number of stakeholders is relatively small. And so you build that foundation, and it's so much easier to build on it when it's solid from the get-go, right?
Exactly. 100% agree.
Yep. I would also 100% agree with that. That's how you do it, because compliance is a partner. Yeah.
Mm-hmm. Yeah, that's exactly right. I mean, if you think compliance is expensive, just check out the fines, right?
Exactly.
Just check out what happens otherwise.
There you go.
Exactly.
Right.
Yeah,
Or when I will say, or when if you have a good compliance foundation and you're a startup, or you're thinking about a raise, you're thinking about going to market, or things like that, you can also think, well, I've saved X amount in fines, and I've increased my enterprise value by X amount because now I'm licensed to operate in the EU, and I'm licensed to operate in the US. I spent that money on the MTLs now, and I can go to market. My partners will trust me more because I've gone through that. It really does pay dividends, I think.
100%. I think the other thing associated with fines that's often missed is that along with fines are often remediation processes that you have. So you're spending resources on people, software, engineering, whatever it is that you need to do in order to lift up the program to meet the requirements of the finding that you got that led to the fine in the first place. So like you may have, a $10 million fine or more, but then you also have to spend another 10 or $20 million on hiring people, on working with consultants, on rebuilding your engineering, on looking for new firms, and then testing that. And, once you hire those people, then you have to use them to do the things to fix what you have to do. So again, sort of like in the reverse dividends, you have, continuous costs associated to that fine. So it's not just the leveling of the fine from the regulator, it's all of the ancillary actions that follow suit after.
Yeah, that is an excellent point, Lauren. Excellent point. Lauren and Peter, let's get this out to you guys. So what, without talking, specifically about your compliance departments and what you guys are doing internally, from a high level perspective, how are your teams structured, and well, in an overall general sense, and how do you divide up responsibilities, and bring this whole thing into practice? What is something maybe different from the fiat world that you might have to do in the crypto world, and how did you manage to bring everyone together and do a great job in crypto compliance?
I can start us off.
Yeah, you start.
I think I come from a slightly different perspective because we're a pretty large firm in comparison to a lot of the crypto firms. So a lot of new startup or smaller firms are going to have a smaller team. I'm fortunate that we do have a larger compliance team that we're able to focus on. But I think, there's a couple of ways to do it. And I think there's a couple of differences with how teams are set up. There's sort of like a hub and spoke model where the hub is going to be your general operations. So your FIU, your EDD, your CDD and CIP processes, your onboarding flows, the engineering, the actual day-to-day operations is usually a very large team. And then because a lot of these companies, or us and some other companies in the world at that level, have multiple operating entities that operate in different jurisdictions where you also have to be licensed. And in those jurisdictions, you're going to want specific SMEs that are associated to the regulatory requirements for those jurisdictions. So we have sort of like the spoke aspect to, like, I'm the US Chief Compliance Officer, but we have a UK one, and we have an EU one, and then we have different jurisdictions, Canadian, Australia. So like, because we have all of these operating entities, we have to have compliance professionals that are specific to the requirements in those entities that are supported by that hub, by that global operations. And then if you go down to that hub, that's then bifurcated into different verticals. I think very similarly to the way you do find it in traditional finance, where you've got, a financial investigations unit, you've got an enhanced due diligence unit, and then within those units, it can be broken down even further to people that specialize in certain areas of that investigation. Your high-risk clients, you're going to have certain types of entities that may arise very regularly that you're onboarding, or for your investigations, you're going to have people that specialize in triage, people that specialize in fraud or people that specialize in specific types of activity or want to do proactive investigations. So I think that the larger you go, the more similarly structured you probably will be to a financial institution. I think the difference is, and hopefully the difference is, and what I find is most successful across the board, at least in where between crypto and TradFi, is that when you blend the two, and if you have experience in both, you're better off. So like the people that do have experience in, okay, I started my career as a surveillance officer at a bank, and then I worked my way through investigations and doing wire transfers and sanctions and trade-based money laundering and whatever, moving your way into policy before getting into crypto. And so having like a wide menu that you can choose from of knowledge helps with being able to go, okay, well, this is a different industry, but I can take all of the experience that I've learned from the different components of traditional finance and apply it to an industry that's quickly moving and dynamic, gives you a little bit of an edge. So, I think sort of blending the two makes a difference.
It's the old saying, it's same but different, right?
Yeah, exactly.
Yep. There you go.
Yeah, Peter, you want to take a shot at it?
I will. I will come from the other end of the spectrum, where what Lauren said, she's got a very large exchange, and Alpaca Crypto is not anywhere comparable in size to Kraken, and so she described my dream setup. I'd be like, ooh, that sounds so nice. And when you're like first on the scene and you're this is not the case at Alpaca, but when being the first compliance officer that they've had, that there's it's you, and you get to have all of it. So all of the low level alerts and the FIU and the registration and the regulator communications and the exam handling and the policy writing and the training and doing the marketing reviews and all of these sorts of things. When you're the CCO at a startup in crypto, you get to do all those things. So you get a lot of experience, and you get to see a lot of different aspects, and you get to interact with lots of different parts of the company. But you can do that for a while, but you have to eventually figure out, like, okay, what's taking up the most time? And the way that I have typically structured it is that my first thought would be, okay, I can handle like regulatory, or I can handle the financial, crime, the AML side of it. Which one seems to be more important to the company, or which one is the bigger problem that I need to tackle first? And then I'll hire sort of a mid to senior level person to take the other half, what they're doing. And then I will lean on them to build a team and to know what to do and how to triage. And we'll work through it that way. So how is it divided? Typically, to be very basic, like when you're just starting out, like regulatory, and then AML, KYC, financial crime. So you have that sort of bifurcation. And then from there, you see what's taking up most of your time, what's preventing you from doing job from, sometimes you are doing strategic planning in the morning, and then in the afternoon, you're clearing alerts. And that's the way it goes sometimes. But then, you just start hiring good people. You start hiring at the senior level, and let them help you, and they can build teams and hire people that you trust and that that you have good connections with. Sometimes people will be very tempted to say, oh, well, why don't you just hire like 5 analysts for that price? Then, because that doesn't necessarily help you, that just gives you more work and more headcount. So that's from the other end of the spectrum.
Just to what Peter was saying, because I think the one point that I dropped, and I think you brought it up perfectly, is that oversight. Like, even if you do have support people that you're bringing on and you're segregating like responsibilities, because I've, similarly, like regulatory compliance is probably the bread and butter of what I do most of the day, but I still have to have regulatory required oversight over the operational outsourcing that's happening on the global compliance side. So yeah, if you bring in 5 analysts that like quickly plug out stuff, but it's not well done or they're not catching things, you end up redoing their work. And so because you have to oversee it because you're still the responsible and the liable party for regulation and registration requirements.
Yeah, absolutely. And I think one of the things I took away from here, kind of in the weeds is, the difference between, a company as mature as Kraken is versus where Alpaca is. So, they're different size levels and different, different workloads and stuff. So, the difference in the team structures, how big it gets and how big it should be. So, Steve, you want to take a shot at that real quick? I have a question just for you though. So if you want to take a shot at what we talked about, it's great, or we can just jump in the next one.
Yeah, so I'm coming at it from more like Peter's perspective. As we are building out a team right now. We're launching an office in the EU, and I think about this every single day: how to make the most effective team that deploys the investment we're making in it most effectively right now. And so I think of it as again, similar to what Peter said. So I have somebody who's going to oversee regulation. I'm going to have somebody who's overseeing money laundering. Really, those are their specific roles. And then an outsourcing officer who's overseeing our then contracted compliance personnel, right? But that who has that expertise. So it's not as if they're just crossing the T's, dotting the I's, saying, okay, well, thank you for this reporting. It's been great. So it's really like we're doing it with 3 heads over there, plus myself and a GRC analyst. That's 5 people. We're small, we're growing, but it's a very effective team. So I think it's a really fun puzzle to solve. And how do you cover all of these requirements? We have a matrix. And then when it actually comes time to doing projects, we generally rely on that kind of matrixed structure. So one person, no matter where they are reporting, no matter what their title is the owner, and then they're the ones who manage all those projects and then will report back. So it's really, at the end of the day, you get something that looks as effective as a larger organization, but at just that smaller scale, and where everybody has a little bit more to do, maybe than just having one silo.
Yeah. So Steve just summed this up in 2 words: a fun puzzle. So that's interesting, Steve. Never would have thought compliance like that, but especially crypto compliance. But here, let me get into this next question, because this one I think we'll go back around the other way. So we'll go Steve, Lauren, and Peter. But this actually gets down to the core of what you're doing more and more: engineering products. So how are the regulatory expectations, certainly the new ones that we're seeing now? And we're seeing regulatory, I'm not going to use so much clarity, but a little more than we had around the world coming in. So how is that changing your design choices of your products? And do you think there's still room to innovate responsibly in this world?
So I would say the way that I think of it, if I can answer it this way, I've used a lot of metaphors this morning, but that's okay. Is that, if we're getting more clarity in the regulations, which we are, and thank God for that, it looks to me like a canvas. We can still, there's still a lot of brushstrokes in there, right? You can innovate, but it makes the conversation with my engineering and product team much easier. I say, here's your boundaries. Here's what we must do, right? It could be something as similar as like, our terms and conditions have to say this. We need to, like, the travel rule says this. We need to have a capability so that we know, where the source of funds is coming, or we're going to integrate into this transaction monitoring provider, or very importantly for us, if we're designing a flow of funds and we want to stay out of that flow of funds, this is what it must look like, and how can we tackle those engineering issues, right? I won't call it a problem, puzzle, I guess. And so I think of it as really just giving my team a playing field, and I haven't found it to be that difficult. Again, from a perspective of a company that's still scaling, we're building our products. We made a conscious decision actually to be non-custodial for now. So we're always designing outside of the flow of funds, and so I think when we have that, and we're not an exchange either. So once we have that sort of paradigm laid out, we can rely on partners money transmission licenses, right? Or the partners to hold custody of our assets. So I think it's made it so much easier to counsel my teams. I'm saying it depends a lot less, and I have actual and actionable advice to give them.
You're
Interesting approach.
Depends less is rare.
Mhm.
Yeah.
Lauren, this sounds like something that's right down your alley.
Yeah, I think that the more clarity we have in the regulatory environment, the easier it is to go forward to market with products and work with our engineering teams to do so. I think the one thing that I've consistently heard over the last 6 years that I've been with Kraken is show me the reg. When they come to us to build a product and we go, well, you can't really do that, or you can do that, which is what the compliance team really wants to do, is to say, yes, you can do that, but here's how you do it within a framework. And without that framework, sometimes you're going, well, it's a global best practice to do X, Y, Z. And what engineers who want to move quick and be as, customer friendly and forward facing and innovative in the market is, well, if it's not in the regulation, then why should we do it this way? And we typically say, well, because we could get called out by a regulator on it because it's an expectation to have this in place or to do it in this manner. And that's a hard thing for very linear thinkers on the business and the engineering side to sort of understand, which is awesome. If you learn how they work, then it's one thing I've said is like, if you learn how they think, then it makes speaking them and explaining things a little bit easier. Same with that me, like if they learn how I think about things, then it becomes a much more, collaborative relationship. So having the reg, I think, makes it much easier to be able to say, yes, we can absolutely launch the project. This is how you can do it. These are the limitations, and this is where you can go wild because there isn't a reg about that. And then point to the actual letter in the language that says this is what you must do. Sorry about that. So I do think that we can innovate, creatively and continue to grow the market within the bounds of the regulation. But I do think, again, sort of going back to my earlier process, is that forward thinking is still key. So, if that reg isn't in place yet, or if you're operating globally and, like Steve was saying, like we're now ready to go live in Europe. Well, Europe is much more prescriptive than the US. And I think even with the coming Clarity Act or, the innovation law that's coming through the Senate and the Genius, it's not probably going to be as prescriptive as MiCA is. Like it's to the letter of everything, super detailed. But some of it might be better to adjust and implement across the board for your entity so that you meet that higher standard early on, rather than sort of doing something for the US and something different. And you mentioned travel rules, Steve. So I think travel rules is a good example of this, where it's, in some cases, it's not so good to implement across the board. There are some regulations for travel rule requirements in like Singapore, for example, that are extremely burdensome for the client and extremely burdensome for the business. And so if you don't have to implement that, it's very often that you don't want to. But the travel rule requirements maybe in the UK, though more prescriptive and more complicated, maybe a more easy suit to be able to implement. So I do think that there are areas where you can level up and meet that sort of like highest common denominator. And then areas where you do pick and choose where you follow the letter of the law across the board globally.
Interesting. So three levels basically. Letter of the law versus what's acceptable versus what's the highest standard. Is that kind of how you look at that?
Yeah, exactly. Like how to how to implement that best practice where possible. And where you're able to point to the letter of the law. I think that the two places how you approach compliance, and then the gray area in between is, okay, we don't have specific regulation, and maybe the highest standard is not the best way to do it. So how do you still implement a good global best practice that meets what you assume to be your compliance requirements and meets what you think is the best way to do this to protect the consumer and protect the business while still fostering innovation? That's the sort of sweet spot that's more still.
Yeah, definitely the trade-off that a lot of CEOs grasp with, right? All right, Peter, you're up.
I'd first have to give big props to Lauren for articulating that so well about communication internally. Because if you can figure out how to speak to all the different departments, because the way you speak to engineering and developers are very different than the way you speak to marketing, which are different than the way you speak to the legal side of the house. It's once you grasp that, it can make your job easier. And very similar to Lauren, I have also heard, show me the reg. Where does it say I can't do this? And sometimes, my my snarky self will get the better of me, and I'll say, okay, can you show me where you're allowed to own a cell phone? Show me that. Show me where it says you can have one. And they're like, well, what do you mean? I'm like, exactly. Like, you can't show me where it says you can have a cell phone, but I can show you where it says you're not allowed to hit someone. So I will take that and be like, look, these are best practices. These are things some things you have discretion on, some things you don't. Otherwise, like, hey, you're welcome to do this. Here's some fines that have happened. Here's some anecdotal evidence. And here's, and then when the letter of the law does exist, when it is prescriptive, here's a hard and fast no, because this is what it says, or you must do XYZ, period. So I think, not just to parrot everything, but it is a very tricky balancing act between those two, and looking at the different levels. And when you're looking, internationally, or even, just among states with, trying to roll out your product, what standard do you use? Do you use like the gold standard, like the hardest one? That, doesn't always make sense to do that. If you're going to say, okay, when we get to these customers in this area that require it, okay, we have to do it here, fine. But there's no need to create that burden enterprise-wide, because it's not really helpful, and you don't get anything beneficial out of it, right? Going to the higher standard helps the compliance teams and the AML teams do their job, because they'll have more information. They'll know more about what's going on, and can protect consumers and the company better with the more information. Balancing that with user experience and friction, and that's the line that you walk. And one of the things that I've found most helpful is that talking with colleagues, in this space, and, Chatham House rules type of get-togethers. You're saying, hey, I've got this problem. What do you think about this? How has this worked for you? And people just, in a safe space, getting together to share the stories. So your network is also really important. And I just want to put that out there to make sure it's a resource that may not necessarily be mentioned often, but it's one that's, vitally important.
Right. That's a good point. Your network's important. There's a lot of people who know a lot of good stuff. And if you have questions, go ask. All right. So don't be the one to ask. That's probably the better policy. So so for the audience, we're going to open up to questions. If you have questions, throw them in the chat box. I'll get to them real quick. But while they're doing that, I do want to ask this to Peter, because it's becoming, certainly with crypto, this is a big deal, and we're seeing a lot more. I would say remittances doing with stablecoin offerings. So how are you going to manage cross-border compliance, and what's some of the strategies around that?
With cross-border compliance and bringing in stablecoins and working with that, one of the first things I look at is with the partner is, are they, what are they like? Are they allowed to send stable coins? Is a license required? And then the flip side, like, okay, if there's no rules, or if they're already a licensed, entity, or, whatever, then is there something I need to do as a company to be able to accept it? Because sometimes they'll say, okay, well, if you're going to accept, crypto from an entity in our country, you need to be registered, or you need to be a licensed. So I have to make sure that the company doesn't need to go through some sort of registration or licensing or things like that. Just as a quick anecdote, that when I had to do a country risk rating update recently, then from the one that had been done previously, I noticed that 70% of the countries that now had some sort of crypto regulation in place, either some sort of framework, or they were planning on it, or a new law had just passed within the last few months about how to operate there when you're dealing with crypto assets. So the first thing I check is, the regs and what are they allowed to do. And then once they pass that test and they're good to go from a KYB point, then we look at wallet sourcing. Like, is it one wallet? Is it multiple wallets? Is it, is this your customers that are going to be sending in? And my preferred is that the entity would take all of the they would receive it in one wallet, and then from that one wallet send it to us. So that way I don't have a whole bunch coming in. I know what's one, and I kind of push it back to them when I'm dealing with cross-border. And and then the rest of it, like I said, make sure your country risk list is up to date, and that's something that you pay attention to. And it's not one of those things you can just like, oh well, I think it's okay, or I can just put this up later, or I don't really get asked about that. No, it's vitally important, especially now, especially with crypto, to keep that up to date.
Yeah. Lauren, Steve, you want to take a crack at that? Cross-border payments and jurisdiction?
Sure, I can jump in quickly. So I think, Peter, your point about licensing was actually something I didn't think about with regards to the question itself, but I think that's spot on. That's exactly like an amazing starting point. You absolutely need to know what the regulatory environment is with the countries that you're interacting with. But from just like an AML perspective, I think your last point is actually also very spot on. And I think of this coming from traditional finance back in the day. My favorite investigations were international wire transfer investigations and trade finance. And it often involved very large transactions of payments between individuals or entities from, opposing countries. And some of those countries were high risk, and investigating what high risk meant for that country, in particular in relation to high risk in other jurisdictions. I think is key. Like, what is it high risk for? Are you looking for trade-based money laundering? Are you looking for TF? Are you looking for scam-related activity? Because it varies, interestingly, across the board. You mentioned pig butchering earlier. Like, okay, Southeast Asia is very known for being a hub for the end point for pig butchering or romance scams or investment scams, while South America is obviously more known for narco trafficking. And the Middle East is going to be more associated with trade-based money laundering or associations to trade finance. I think having knowledge on those nuances with the risks that the global network provides, I think is really key and important. I think the other component is like similar to licensing. What are your travel requirements? There are some jurisdictions that have very specific requirements for receiving or sending information. So you have to know those sorts of details. And then even drilling further into the risk profiles. Like FinCEN issued just recently that GTO for the US, where it wasn't just like, okay, the US is a low risk country just overall, even though it's the end point for, drug sales a lot of the times, or for the kidnapping of women for human trafficking, or even for the end place that people get trafficked to. But there are specific areas within the US that are much more high risk, that are high intensity drug trafficking areas, or, that are HIFICA areas. So having that level of nuance and being able to do it, especially with crypto, because we're dealing with a digital online asset exchange, you're dealing with a digital footprint. You can look at somebody's IP and say, oh, they're actually located in a border jurisdiction. Similarly, the way that banks would do it and say, okay, you're located in a border area of Arizona, so therefore you're going to be slightly more higher risk than the area that's in, the middle of Iowa, for example. And I'm just sort of calling out states on, not that there aren't high risk areas in Iowa, but I think it allows, especially with crypto, and now that that leveling up is going to be expected of crypto companies, that sort of thought process with regards to how you build your transaction monitoring rules, what you look at with regards and how you build out your network analysis utilizing your blockchain analytics, really make a difference, being able to tie in those geographic regions and those nuances that what you might see for trends and typologies and emerging risks really play a key role.
Interesting point about the GTO and the IP. I mean, that's definitely in the high risk areas and HIDA. So those are very interesting points that you don't often hear when you talk to people in compliance, but that's exactly what keeps me up at night sometimes. So
full disclosure, I wanted to be a government agent a long time ago, so I really dig into this stuff.
Okay. Well, I was, and those are exactly the terms we use a lot. So I appreciate it. Steve, you want to throw in some useful knowledge there?
I think Peter and Lauren have thrown in enough, definitely enough. But I think I'll just say the way that I think about it is when we're looking at a new country and a new project, I want to know really three things. What does the partner want? We're only B2B, I should say that. What does the partner want to do? How are we designing it? And who's my regulator? Meaning, like, I need to know my regulator, and that encompasses not only actually who will be supervising me, but what the regs look like, how they view them, how strict they are. Where are they strict? Where could where my processes and procedures don't have to be as strict? So it's really, I think that's the how I look at it holistically, right from the beginning.
Holistically, great term. I think that sums up compliance better than a fun puzzle. But holistic is definitely what you want to do in this world, especially in crypto. Well, ladies and gentlemen, we have come to just about the end, and I don't see any questions for this group of expert compliance people. But I will tell you, it was enlightening. I learned a ton. Lauren, I could just pick your brain for hours, probably. I'd sit around and just talk about this stuff. So I appreciate the knowledge that each one of you brings to this. The professionalism is, it's probably one of the greatest things we have going for us in the crypto space is super smart people that are very professional and understand, what we're doing. So like that saying that we had in Texas a lot, it works great. You just got to fix it. Well, regulation works great. We're just going to fix it and make it better, right? So,
True.
Other than that, one final shot from each of you. Anything to say before we log off?
I don't know. I think we're looking forward to a really exciting time in the industry. So I think it's just growing and growing. We'll probably look more like the formal world, and as we become more formalized, but we can still be a bunch of pirates doing fun stuff out there.
Absolutely. All right, ladies and gentlemen, thank you. Have a great day, great evening, great morning, depending on where you're in the world, and we will meet again. Have a good day.
Thank you all.
Thanks, everyone.
Bye-bye.
Bye.